Good morning, friends, and welcome to yet another episode of Cafe Mutual webinar. We all agree that 2020 was quite a challenging year for all of us. So, we have seen heightened volatility in both equity and debt market, new norms on RIAs, introduction of flexi caps, and so on. But, friends, 2020 has finally come to an end. Now it is best time to talk about the upcoming year. So, in order to find out how 2020 would be for MF industry and distributors and what to expect from it, to give justice to this topic, we have with us DP Singh, Executive Director and CMO of India's largest asset manager, SBI Mutual Fund. With over 30 years of experience, DP has been instrumental in expanding SBI Mutual Fund's reach in both urban and rural areas. Welcome, DP.
Thank you. Thank you, Nishan. It's always pleasure talking to you and Cafe Mutual per se. So you're doing a great job. Congratulations.
Thank you. Thank you so much. So, DP, as I was saying that we have seen many changes last year. So, what changes, according to you, are here to stay?
See, changes whatever have been made, Nishan, those are going to stay. At least the changes are not made to get repealed and all. Whatever changes had to happen has happened. Of course, during the year, everybody, including regulator, they learn from the dynamics of the market, mistakes done by the players, so on and so forth, and the new changes keep on coming. And see, one thing we
Can you speak a
are,
little louder, DP? Sorry to interrupt.
yeah. We can see actually be proud of what our regulators are doing. See, honestly speaking, in some of the areas we are far ahead of the curve, and we are considered India is considered as the front runner as far as regulatory changes are done. Of course, all the changes, whenever a change it brings a lot of pain for the players, right? Because they have to shift gears. But one thing I'll give it to the industry players, especially to the distributors. They have faced all these challenges with great courage. I've seen during the last 10 years, ever since the entry load was banned, every time a change came and there was a lot of hue and cry. But fact of the matter remains, company kept the industry kept on growing and growing. Okay, and see that's the beauty about this thing, and that we as an industry, manufacturers as well as distributors, we have been able to when all the headwinds which came, we have been able to really around that in a big way. That's the congratulations to everybody who has done that.
So, persistency pays off well.
Absolutely, absolutely. There's no doubt about that.
Okay. So, DP, what would be the impact of pandemic? So, I'm sure pandemic is not over right now. So, what would be the impact on fund houses and distributors in the years to come?
Honestly speaking, Nishant, the pandemic has given a chance to everyone, investors, distributors, as well as manufacturers, to think a lot and to redefine the rules of the game. Honestly speaking, in fact, the pandemic, the whole year 2020 has given a lot of lessons to everyone. Earlier, we were going just in a I mean, one thing, some wave is going on, and we were driving with the wave. The 2020 has given a chance to rethink, energize, and re-strategize the businesses, the way of doing businesses, and the way we have to create our narratives. And the best thing has happened that everybody has understood the value of asset allocation. Today, when the interest rates are where they are, yields are there where they are, and the market is at a level. So, in fact, I have never seen in my career of more than 20 years in the asset management company such a challenging time, where yields are at the lowest level, where market is at a level which is with a PE of 36, 37, 38, and interest rates, bank FD rates are below 5% on FDRs. So this combination is making see, a lot of thinking amongst the investors, what to do, what is the way out. So what happens in such a scenario? I mean, everybody who wants to have a kicker in the portfolio, they tend to remain invested in a risky asset class. So we have seen a lot of redemption, but the redemption could have been much, much more. Honestly speaking, we have seen redemption, those are there. But one thing is that the people have understood the market. Earlier, what used to happen in the market, whenever the market is up, we used to get more and more flows. This time is the other way around. Last 3 4 months, one market has a run, we are having negative flows in the market. I mean, though as a business, we are worried about the business levels that we are not getting flows. But honestly speaking, this is the behavior of evolved investor. People are still invested a lot. And, if we take the whole the industry numbers, still it is 12 lakh crores. It's not very high number, but not a very small number also. I mean, we have not seen that. People talk about SIPs coming down. So
Mm.
I see, I mean, yes, SIPs have come down, but come down by a small percentage. And we'll come back, we'll get back. People are now with normalcy coming back, more and more people will enter the bandwagon. I'm pretty sure about that.
So pandemic has somewhat positively impacted the industry in some way.
I personally think so. Yes, because the narratives have changed. The people have evolved. The investors have evolved. Distributors have evolved. They have
Mm.
understood the value of asset allocation, so on and so forth. I think that is for the industry for long term. It is positive.
Great. So, DP, which segment of distributors have been most affected and which section have been benefited from the pandemic?
Again, the people who are evolved, who understood the value of asset allocation, the people who understood the value of taking care of the whole universe of the investor, they have been benefited. They have been giving right advices to people. The people who are into a particular asset class, the people who are just doing equity or just doing debt or just doing saying कि मैं तो ऐसे भी करता हूँ या मैं तो सिर्फ debt ही करता हूँ. That's a problem for them. Today you have to take care of each and every bucket of an individual. I mean, anybody, even if the most risk adverse investor or the most aggressive investor, will have a particular percentage into a risky asset class, depending from 10% to 60 70%. So that's the rate. Unless until you understand the psyche of the investor, how much risk appetite he has, it's very difficult. The people who are having that kind of knowledge, that kind of information, they have benefited a lot. And the people who are doing in one particular asset class, especially in the smaller towns, they have been affected in a big way. That's the worry. But one good thing for
Okay.
distributor is because of the market movement, even if they were doing only equity, their income has actually gone up without anything because of it's a trail brokerage all along, and with the market going up, their income has also gone up.
But they need to focus on broader perspective
Absolutely,
now,
absolutely.
right?
With long term, unless until they adopt technology, they adopt digital tools, they adopt asset allocation for their investors, then it will be very difficult for them to survive in long term.
Okay. So, talking about the fund house, DP, so SBI has become India's largest fund house by assets in 2020. So, what are the three things that has contributed to this growth?
I will put it like this. So the first thing is the three main things are one, trust in the brand, and see, the way we have walked the talk. Whatever we have been saying, we have been doing that only, and we have not never when said something or done something, and we have not let distributors or investors down. That is one thing.
Mm.
Second, we are known for selling the simple products. Simplicity is the key, and our say distribution network is quite large everywhere. When even distributors need not sell the brand, they need not tell people what SBI is. So everybody knows that what SBI is. With parent having 25,000 branches across the world, so the distribution has been all along. And so just to give you one information, we get business from 96% of the pin codes of the country.
Great, great.
96% pin codes have contributed into the assets of SBI mutual fund. So we are there every nook and corner. We get business, and our businesses are actually ring fenced because if we look at the industry numbers and our numbers with our numbers, so we are actually our asset mix is little better than the industry asset mix. So we have got more than 100,000 crore in active equity today. We have more than 100,000 crore in debt, and we have got good share of institutional business. So our distribution network has contributed more than 100,000 crore. I'm talking about other than SBI. So SBI itself, SBI network has given another 100,000 crore. So
Hmm.
our businesses are widespread, distribution network, different geographies. I think that is the key, which is, and honestly speaking, we don't think that we have done a great job. We can do much better.
Hmm.
With the kind of narrative which I'm saying with the network, branch network, as well as distribution network and simplicity, the number which we are having around 4,75,000 crore today, it should have been much better. So we are looking that we feel that SBI mutual fund has a responsibility of market making. It's not only market sharing. We will create the market for the industry and let everybody, when increasing the size of the pie of mutual fund industry is the responsibility which we feel we have no choices, and will definitely, live with that responsibility, work on that responsibility with honesty and all earnest. We will try to do that.
Okay. Now the focus is to, I mean, on the pie. I mean, how to increase the
Yeah,
pie for the
yeah, yeah,
entire
yeah,
industry. Great,
yeah.
great. So DP, of late, the fund house has seen exit of CIO.
Mhm.
So how will you deal with this exit to ensure the growth momentum?
See, SBI Mutual Fund is a great institution. It's not a small fund house, and we are, average age of the fund managers in our country, in our company, is more than 10 years. So
Hmm.
we have a big team. We have 53 members strong team, highest number of CFA charters in the team, and the people, that see, actually hardly anybody has left. And honestly speaking, our CIO was supervising everything, and he was not managing any funds.
Hmm.
So one thing is that, but he put in all the processes in place. When the credit goes to him for stabilizing the fund management processes and so on, and he was there in the company for 12 years. And so are the people who are managing funds. So as far as management of funds is concerned, we don't have to do anything, and we have got enough internal talent to take care of this situation. We always had Plan B, Plan C kind of situation for all the verticals. So it's an institution. It keeps on moving. And honestly speaking, we whenever such a incident, such a moment happens, so it's always give you a chance to rethink and re-strategize, and it's always good to re-strategize from time to time. So we were absolutely fine, and all the best to Navneet. And Navneet has contributed a lot. Let me put on record. See, in the last 12 years, we have moved from a particular number to a number which is today. It was absolutely a team effort across the country, but the people who are at the forefront, they need to be credited with what has happened in the organization. We will miss him, but yeah, I think it's it's moving on. Yeah, that's fine.
Great. So talking about market DP, so
Yeah.
benchmark indices, Sensex and Nifty has touched new highs despite macroeconomic concerns. So
Yeah.
what are the key reasons according to you?
No, it's all liquidity driven. There's nothing all the liquidity easing which is happening across the globe, and people have no choice but to put money in some assets where they feel that the risk is much lesser. As I told you, the yields where these are, and the markets. I mean, it's a relative term. When everybody feels that in the new era, post pandemic, post COVID era, India is going to show path to the whole world. So everybody is expecting that. Everybody is very optimistic about India. India's growth story was always there, but in the new era, where a lot of emphasis is on different parameters, and the way when the our neighboring country has discredited itself. So that way people feel that the population, the what you call the dividend is there, the age factor, the everything, the young country. So those dynamics will work in our favor, and they're allocating money to India. So it's all liquidity game, and we have very good companies also which have a great future. So I think this is only and only because of the liquidity.
Okay. So DP equity funds have been witnessing outflows for the fifth consecutive month now. And SIP inflows are also slowing, is also declining. So what are the key reasons and when can we expect this trend to reverse?
I think as far as SAP's numbers are concerned, I will think that these numbers will reverse immediately because now whatever had to go on has gone out, and the people who have gone out, they are
Hmm.
now feeling that they have perhaps committed a mistake. And there are studies to prove that even if somebody starts the SAP at the highest level, over the period of 3 to 4 years, they make good returns. It's not that they're not making good returns. So anybody, if the right selling happens, and people have the patience, I am personally of the opinion. This is my strong gut feeling that SIP numbers will start improving from here on. Definitely in 2021, the SIP number will grow very very high. Because see, in lump sum, people don't have confidence. People have to sell. There's a machinery, there's a distribution network, there is a sales team of various fund houses. So I personally feel everybody will be working towards one thing, that is getting more and more SIPs, and that is bound to happen. And second reason is that people now have more surplus to invest. So the right advice they are getting from each and every advisor is, why don't you start SIP today? SIP, that will happen. But lump sum, it may take some time because the markets are, people are waiting for the correction. Correction may or may not happen, honestly speaking. And then the money which is lying on the sidelines, then people will start allocating gradually in a staggered manner. I don't think people are going to push the money in a big way in one lump sum. But over the period of time, 2021 will definitely be different from 2020. That's my firm belief.
And what about equity inflows? Will it be reverse? Outflow will be stopped?
Yeah, outflow should stop. But the hot money is gone out. I that's what I'm saying, and I personally feel that the inflows will start in small way, and
Mhm.
not in a very very big manner. I can't expect a big trend reversal. Trend will definitely reverse. We will start getting inflows from here on, but it will take some time. Maybe in, from January 2021, could be. It will be interesting to see the numbers of. January 2021. Up to December, I think whosoever had to withdraw, people have withdrawn or will withdraw. But January onwards, I'm hopeful that we'll start getting the positive numbers as far as equities are
Okay. So DP, many active funds have been struggling to beat the benchmark indices. In such a scenario, how do you see the role of active fund management in India?
concerned. See, active fund management in India is definitely going to stay for a very long period. When we are looking at the last 1 year or 2 year, when the funds have not been able to beat the benchmark, is in the background of one reason, that there were one or two companies where everyone in the industry was underweight, and those shares ran very very steadily, very very fast. Name for example the Reliance. Reliance weightage in the overall indices is very high, and that was the best performing the share 2 months ago. A lot of money flew in from foreign countries into that particular share. But that share was not overweight in any of the portfolios, in majority of the portfolios. So that's why every fund struggled. But if you look at last 1 month, 2 month, 3 month period, so think actually the trend has reversed. Today, at least more than 50% of the active funds are showing alpha for short-term period.
Hmm.
And I think it's a stock picking. A lot of companies are there, and smart stock picking will always give dividends to people. This
Hmm.
was a temporary phenomena, Though globally, it's seen that the ETFs are, the active funds are not able to beat ETFs, so on and so forth. But I think we still have some steam left in active funds, at least for next 2 to 3 years.
Mm-hmm.
The active funds will continue to generate alpha for the people more over the benchmark. And whatever we have seen, it was because of some temporary kind of issue because of higher weightage into one or two shares, which was too high, and those shares are very very costly. And generally, fund managers were not in favor of buying those stocks. So that has contributed to no generation of alpha. But one more thing, see, Nishant, I would like to hear. Though people do compare it with the with benchmark,
Mm-hmm.
but honestly speaking, the big investors always have their own portfolio also and their mutual fund portfolio also. So
Mm-hmm.
mutual fund portfolio in their own with their own portfolios generally has given a more stable return than the personal portfolio. But these are not the things which should be seen in short period. You have to look at over the longer period. And of course, with the research team which are there in all the fund houses, I think they'll be able to do a good job, a pretty good job for the investors.
Okay. So, how has SEBI recategorization impacted the fund performance?
I don't think that has impacted too much. No, nothing much has happened. Especially if I talk about SB mutual fund, we hardly had to make any changes. All the funds are where they were, except for one or two funds where we had, and that was very smoothly done. And when categorization changed, even benchmarks changed. So when you look with benchmarks, those funds are looking okay. But categorization has, honestly speaking, initially we were saying it's very disruptive, but over the period of time, looks like it's a blessing in disguise now. When the chances of mis-selling have reduced a lot because the names itself tell, what it is, whether it is a credit risk fund or a mid cap fund or a small cap fund. So people are able to immediately make a choice that where they're going to put money. So that's very very good, and it has not impacted the performance in a big way.
Okay. So, talking about MFDs, so year 2020 has witnessed a sea change in MFD business. So
Hmm.
now MFDs cannot offer services like financial planning. They cannot even call themselves IFA now. So in such a scenario, how MFDs can add value to their services?
Nishant, as I told you earlier, they have to adopt the asset allocation model.
Mm-hmm.
Asset allocation is the key,
Mm-hmm.
and they must know. They need not even if they are not doing the financial planning, so that automatically will happen if they are taking care of the asset allocation from time to time. So
Mm-hmm.
that's the key. And see, in the BFSA industry, when if somebody has come into savers, when the savers become investors, there are three, four, five categories where the funds can be allocated. And second, now it's more emphasis has to be on solutions rather than selling the products. The earlier most of the preference was given to selling a particular product. Now there are so many solutions. Even if they don't have a solution, when by fund houses, they have to create their own solutions and do asset allocation accordingly. So I honestly feel that MFDs are doing a great job in that. So they're already working. We to sit here and speak about them, but they are the CEOs of their own business. They know how to go about it, and the way things have evolved, the way things are consolidating in the industry at the distribution level also. Those are very very welcome things, and see they are creating capacity. Not only capacity, they are creating skill sets also by getting together. So that's a very very welcome thing, and I think MFDs will sail through this challenge also very very successfully.
So, what are the three things, according to you, that MFDs should do to become future ready? I mean, decade
Yeah,
after.
three things: upskilling themselves, adoption of digital. These are the two major things, and asset allocation is the key.
Mm-hmm.
If you are doing it, do it more sharply. If you are not doing it, do it more actively. And an individual should not have. If you are having investors, MFDs are having investors in only in one asset class, then it's a problem. They should have people investing in multiple asset classes within the mutual funds. I think once they do it, their total universe will increase. They will be able to align the asset allocation. So asset allocation, upskilling, and digital adoption. These are the three things which are required by the MFTs. And honestly speaking, this is not. I'm not giving any summons. They are already doing it. But the
Mm,
people, if there is somebody who is not doing it, they have to adopt it, and they have to increase their team sizes. They have to get more and more numbers under their fold, more and more people, and
mm,
that we need more distributors. Less distributors, when we are not able to reach out the potential of
mm.
this country, which is huge.
Okay. So one last question. What is your business outlook for the year 2021?
Year 2021, I think it's going to be a turnaround year. I feel the CAGR growth of industry should be minimum 20%, 20 to 25%. That's what
Mm,
my number is. I am saying it on the basis of because the choices are very, very limited. And within the mutual fund, though we are having challenges of lower YTNs, we have challenges of equity market being
mm,
costly, but the solutions which we can provide, nobody else can provide. The tax efficiency which is there in the mutual funds is not there. The kind of liquidity which we offer cannot be offered by anybody. And all fund houses are working very, very hard on the digital adoptions and digital tools which are there. The new set of distributors which are coming through fintechs like when I don't want to name it, but when they are doing a big job, they are creating a big market.
mm,
Only thing is that they're in those cases how to keep the persistency on. What we have
mm,
seen is that the churning in that category is very, very high, much more than high, and that is not helping anyone,
mm,
neither investors nor the fintech company nor the fund houses.
mm,
So because you're putting a lot of efforts in getting the investors, but investor age or is very, very low in that category. So that the investment age has to go up that is one area which we have to work on. But I'm very, very optimistic about 2021 because people have learned how to live with the COVID, even if the COVID remains and the pandemic remains for another 6 months. People now know how to handle it, and the things are becoming normal more than expected, more quickly than expected period. So I'm sure the things will improve, and we'll see very, very good improvement in the numbers in times to come.
So with that, we have come to an end to this interesting session. Thank you so much, DP, for your valuable time and input, and Happy New Year.
Thank you. Happy New Year to all the listeners, and keep on doing the great job, Nishant. Cafe Mutual is doing a great service to the industry as well as MFDs. Please keep it up. Have Merry Christmas and Happy New Year to everybody.
Thank you. Thank you so much, DP.